Momentum looks active, but distance is not holding. Volatility keeps shifting inside overlapping session structure. The first thing that matters on this chart is not speed. It is return. Price keeps leaving one local area, then coming back through the same center again. And that center is the weekly 0.33 area. Not because the number itself is special, because recent sessions keep forming around it, pushing away from it, then measuring themselves back against it again. That is what gives the level weight. If a session-centered framework has been followed through this week, the behavior is already familiar. The important zones are not appearing in empty space. They are appearing where earlier session memory is still active. A session box forms on top of a prior boundary, or between the lower side of one session and the upper side of another, or directly across a region where several earlier boxes already overlapped. That is the pattern here. This chart removed many older memory references to keep the view readable, but the placement of the newer boxes still reveals where those older references are. That point matters enough to repeat. A session-based box rarely forms in isolation. It usually forms where earlier acceptance, failure, or repeated return already happened. That is why these locations keep carrying forward. The box is not important only because it is the newest box. It is important because it inherited friction before it even formed. Now go back to April 1st. The April 1st U.S. session formed across the upper boundary of the March 30th U.S. session box. At the same time, it overlapped with the March 31st Asia session box. That is already a compression condition. A new U.S. session did not begin with fresh space above or below. It began where prior structure was already stacked. Then the behavior exposed the contradiction. Price moved back down and tested the lower boundary of the March 26th U.S. session box again. That means the move was active, but the environment was still anchored to prior memory. This is where the meaning of weekly 0.33 becomes practical. It is not only a higher time frame marker. It is acting as a working center for repeated session inheritance. The lower side keeps attracting return. The upper side keeps failing to hold separation for long. And that changes how the chart behaves through time. Price still moves. The white band still stretches and contracts. The candles still cover visible distance. But the distance does not settle. That is the contradiction. Movement is visible. Relocation is not. Now the 5 axes can be seen through one sequence. Session remains the anchor because every move is being judged against prior session boxes. Volatility remains active because the bandwidth still opens and narrows through the same structure. Position remains unstable because price keeps shifting from upper overlap to lower memory without holding one side. Pressure remains inconsistent because expansion appears, then fades back into the same center. Interaction remains dense because old and recent boundaries are stacked near the same zone. This is why the chart feels misaligned. Pullbacks extend deeper before stabilizing. Continuation attempts stall earlier. Reaction becomes faster near both edges. Distance expectation compresses. Failure frequency increases. Holding pressure rises each time price reaches a stacked boundary. If sessions continue forming on top of earlier memory around weekly 0.33, distance remains limited. If one side begins holding beyond the overlap instead of returning through it, tolerance must widen. Execution conditions remain in transition. Price is moving quickly. But the move keeps running back into older session structure. That contradiction becomes clear when the April 1st sequence is followed in order. Start with the April 1st U.S. session again. The box formed across the upper boundary of the March 30th U.S. session box and overlapped with the March 31st Asia session box. That means the new session was born in a place where 2 different references were already active. This is not a broad expansion environment. This is a narrow inheritance environment. One active session edge was already underneath it. Another recent session box was already crossing the same area. So before the move even developed, the structure was already tight. Then price moved lower and tested the lower boundary of the March 26th U.S. session box again. This repeated test matters, because the chart had already shown reaction there before. So when price came back into that lower reference again, the move was not discovering new ground. It was re-engaging older memory. That is what a session-centered chart looks like when compression deepens. The path looks active. The destination looks familiar. Now move to the April 1st Asia session. This part of the chart is even more important. The April 1st Asia session formed compressed inside the March 31st Asia session box. That compression should not be treated as a small detail. It is the whole condition. A box that forms compressed inside an earlier session box is already telling you that distance has been reduced before the move begins. The session is not starting with room. It is starting with inherited friction. That is why this kind of formation matters so much. Compression at formation changes the behavior later. Continuation attempts have less tolerance. Pullbacks can deepen faster. The next active edge becomes closer. And when the next active edge is closer, reaction speed increases. That is exactly what happened here. After forming compressed inside the March 31st Asia session box, price tested the upper boundary of the April 1st U.S. session box. But the move did not persist. The upper side was touched. Distance did not hold. And once that persistence failed, the lower side became active quickly. Price then moved sharply lower. It broke through the lower boundary of the March 30th U.S. session box. It broke through the lower boundary of the March 31st U.S. session. It moved into the March 27th U.S. session structure. Then it extended toward the lower boundary of the March 27th U.S. session box. So the sequence is very clear. Compressed formation first. Upper test second. Failure of continuation third. Acceleration through stacked lower references after that. This is not random downside activity. It is the behavioral consequence of a compressed session failing at the upper edge. The white band also reveals the same contradiction. Volatility is still present, but the presence of volatility does not produce stable distance. The band widens. Then the move collapses back into prior memory. That is not an absence of movement. It is movement trapped inside session inheritance. This is where behavioral friction becomes visible on the chart itself. Moves fail to hold distance. Continuation attempts stall earlier. Reaction becomes faster and less stable. Once one edge fails, the opposite edge becomes active quickly. Tolerance becomes narrower. Holding pressure rises. If a later session continues to inherit compressed structure from prior boxes, failure frequency stays elevated. If one side begins holding outside the compressed formation instead of snapping back through it, distance can widen. The April 1st sequence did not resolve that question. It only made the compression visible. Price is moving again, but the market is still trading between anchors. That is what April 2nd exposes. After the April 1st Asia session carried price lower through the March 30th U.S. session lower boundary, the March 31st U.S. session lower boundary, and into the March 27th U.S. session structure, the next U.S. session did not form in fresh territory. The April 2nd U.S. session formed at the lower boundary of the March 27th U.S. session box. That matters immediately, because this lower boundary also sat near the weekly 0.33 area again. So the chart returned to the same higher time frame center through a different path. This is why weekly 0.33 keeps mattering. It is not important because price touches it once. It is important because multiple sessions keep organizing themselves around it. The lower formation on April 2nd proves that. The move down found the same anchor again. Then the April 2nd U.S. session lifted away from that lower boundary and tested the upper boundary of the March 31st U.S. session box. That upper area also aligned with the lower boundary of the March 30th U.S. session box. So even the rebound was not moving into clean open space. It was moving directly into another stacked reference. That is the contradiction again. Distance appears, but separation does not. Now move to the April 2nd Asia session. This session formed overlapping the March 30th Asia session memory. That overlap matters because the chart is still inheriting older session structure instead of replacing it. Then the price moved lower. It tested the upper boundary of the April 2nd U.S. session box. And then it tested the upper boundary of the March 31st U.S. session box as well. So the sequence on April 2nd is not independent from April 1st. It is a continuation of the same inheritance problem. One session tries to lift from weekly 0.33. Another session forms on top of earlier Asia memory. Then price returns into a prior U.S. upper boundary instead of extending cleanly away. That is why the environment still feels compressed. The market keeps changing location, but it does not keep the new location long enough. Now the 5 axes are fully visible through this one structure. Session remains the anchor because both April 2nd boxes are being judged against March 27th, March 30th, and March 31st memory. Volatility remains active because the band continues to expand and contract around the same center. Position remains unstable because price lifts from the lower boundary, then rotates back into upper overlap instead of relocating. Pressure remains mixed because each expansion block loses persistence before it can separate. Interaction remains dense because the same edges keep being retested from both sides. That is why this chart is not aligning into clean continuation. The lower anchor near weekly 0.33 still slows the move. The upper overlap near the March 31st U.S. session and March 30th U.S. lower boundary still limits distance. So the structure remains caught between inherited anchors. Pullbacks extend deeper before stabilizing. Continuation attempts stall earlier. Reaction speed increases near both sides. Distance expectation remains compressed. Tolerance remains narrow. If April 2nd continues to rotate between the lower March 27th anchor near weekly 0.33 and the upper overlap around the March 31st and March 30th references, distance remains limited. If one side begins holding outside this inherited anchor range instead of returning through it, the behavior changes. Execution conditions remain in transition.